Polyethylene producers announced August price increased nominations this week, 5 cents a pound. In baseball, that is the first pitch of a new at bat. And every experienced hitter that follows the same discipline when they step into the batter's box, you always take the first pitch. You read the spin, you check the velocity, you figure out whether this pitcher actually has their best stuff before you commit to a swing. And this week, I want to go through the entire batting order, every major resin, and tell you exactly what you're looking at before August negotiations open. Because some of these pitches are real and some of them are not. And knowing the difference is how you close quarter three with better margins than the buyers who just swung at every pitch that came in. Before I go resin by resin, I want to give you three things that define the week because it sets the context for everything you're going to have negotiation wise. First, WTI dropped. We're continuing to see the volatility, but $8.60 a barrel, landing at under 84 per barrel, with Brent dropping even more sharply. The driver was a sudden halting in some of the hostilities in the Middle East, pause in airstrikes. That took some of that geopolitical risk out of the crude market almost overnight. And for resin buyers, that matters a lot because lower crude means lower feedstock cost arguments for the producers. So the wind certainly has shifted in your favor this week. Secondly, the July PGP contract settlement of 3 cents a pound up higher to 46.5 cents. I'll come back to this on polypropylene, but to flag it now, not every pitch this week. Some are painting the zone here. This one caught the corner if we're going to the automatic ump system. And third, and this is a headline, multiple polyethylene producers are announcing August price initiatives totaling 5 cents a pound. And what I want you to know, before we go any further, there is a strategy in baseball that actually my favorite team, the Tampa Bay Rays, pioneered. It's called the opener. Instead of sending your starting pitcher to the mound, you send a reliever first, and that's specifically to get the batter to commit to the wrong read before the real pitcher takes to the mound. Right? It has to do with order construction and how managers can affect lineups. And the Rays popularized it. The idea is to manufacture confusion early so that the hitter swings, or that the earlier than they're supposed to, or that the manager makes a mistake and puts the wrong lineup together to kind of maximize their chances. And in polyethylene producers, that's the strategy from this week. They ran openers on buyers, and that nomination letter is that. The real pitch behind this, actual supply, demand, it's telling a really different story right now. And getting into that, let's talk about what's out there. There's very elevated days of inventory, over 40 days, down from some of the preliminary figures, but still higher. And ethylene feedstock spot pricing held flat throughout the month of July. July contracts are expected to settle lower, not higher, because of those weaker ethylene costs from earlier in the month. They're still kind of working through that contract market with additional Gulf Coast capacity coming online this year, which again is supposed to be directed into the export market. It's going to keep domestic supply fairly ample, with export volumes really only up modestly in June. We saw operating rates decline. The market improved from May, but there wasn't really tightening. So now we've got a 5 cent a pound ask. Here's how I want you to think about it. A price increase nomination is a negotiation position. Again, it's not necessarily the market outcome when the letter arrives. Question is not how much of it do I accept? What does the data say and how do I respond specifically based on that? So what did we see ethylene actually cost? Where do domestic inventories sit? What did days of supply look like? If you can answer some of those questions with some specifics, and you can because the data is available, you're working the count. You're putting the pitcher in a friendlier count to you as the batter. And if you just accept the first pitch and you swing at it, that can result in an out. You let a pitcher without maybe any command walk you, or anyway, you handed him 5 cents a pound. Let's counter with data, and that's the action here. In polypropylene, it's going to be a different market, and I think buyers need to be careful about misreading what's happening right now. With July PGP contracts settling higher, it's not a nomination, it's a settlement. It's going to flow through directly into July polypropylene contracts. So we did see the pitch catch the corner. I used the analogy earlier. You can argue with the ump, but we went to the ABS, the automatic system, and this one stands. Supply conditions in PP remain healthy. There was some modest draws in the industry in June, and with some of the days on hand coming down below 40, and stronger demand was outpacing production. There was an increase in export volumes that we saw in this market, which helped to reduce supply, and Heartland's Canadian polypropylene facility returning to service after disruptions is going to help the supply situation, although we do still have Phillips 66's unit turnaround up in the Northeast ongoing. There are no August price increase initiatives for polypropylene. Producers are reflecting continued caution about the underlying demand conditions. And the reality is that, those concerns are out there. It hasn't been a fundamental demand change story in PP in a positive way. The way to think about polypropylene is push on what you can push right now. The PGP settlement, we can't act as if it didn't happen because it did. But the right move is to acknowledge it and to negotiate for things that are still in play. Corner call was real. Let's move to the next pitch in that particular resin. Now, I want to talk through the benzene linked materials again. We've done this for the past few weeks: polystyrene, ABS, polycarbonate, the nylons, because they share the same setup and the same risk. July benzene contracts settled materially lower. For polystyrene, that translates to an expected decline. We're going to see at least 5 cents, if not 6. ABS, polycarbonate both reflect similar downward pressure from those July feedstock settlements. With no August price increase initiatives being announced in any three, we may be in good shape, but the buyers are in a hitter's count. Yes, right now the leverage is real, and the data supports it. But the risk that you need to take seriously is the benzene spot prices have been firming. The crude oil drop this week gave some temporary relief as benzene did ease, but it may not last. The August benzene contract is determined by where the spot numbers are trading now. So if we see some recovery and firmness before the August contract settles, then the favorable count buyers might be sitting into a really different position in August. So it's important that we think about the cost relief that's available in July is going to shift to Q4 at best, with suppliers in some of these other categories having legitimate cost defense to hold pricing. The action on all three is the same. Have your July pricing conversations this week if you can. Don't wait until we get too far into August. The July contract data, which is already settled, tells a pretty different story than what's happening now at the table. For automotive linked ABS buyers, there is a projection out there from Cox Automotive that light vehicle sales were seasonally adjusted to an annual rate of 16.7 million units. That'd be the strongest selling pace of this year. The automotive demand picture is genuinely, that's a good signal. The consumer markets are more cautious, though. The Conference Board's consumer confidence declined to 98.8 or 90.8 in July. Supply conditions remain sufficient to keep this market fairly balanced, and there's no demand argument that justifies the supplier move action right now. So the rest of the batting order, nylon 6, this is the most urgent at bat. And I want to be direct on why. Caprolactam, the key feedstock for nylon 6, fell sharply in July. July benzene contract settled lower. Caprolactam followed. It's a good position for buyers. But the August benzene contract is widely expected to recover. And with that, caprolactam is sure to follow. It's the setup pitch. It's a strike right down the middle. And it's there right now. So swing this week because the bullpen is coming in here for August. And the pitch sequence is going to change on you. One additional note. The EU announced tariffs up to 67.6% on nylon fibers from China after finding that Chinese pricing has affected European producers. This is a structural development. It's going to affect the European supply positioning over time. So we need to keep an eye on it there, and we will. Nylon 6.6 July contracts are expected to roll flat. No August nominations, balanced supply demand. Feedstock costs were stable, and consumer sentiment improved for a second straight month. With easing inflation expectations and a stronger economic outlook, the automotive demand remained constructive, and that certainly helps nylon 6.6. The leverage is here. Any open volume you have should be negotiated right now. It's not urgent in the same way that nylon 6 is, though. PVC, days on hand climbed again. No August nominations. July is expected to settle flat following a month where comfortable inventories and adequate supply and soft demand prevented any price traction really at all. On the demand side, housing shows some signs of stabilization. New single family homes increased a bit in July or June, I should say, but elevated mortgage rates and affordability challenges just continue to weigh on underlying buyer activity, and confidence for builders remains historically weak. That demand picture has not changed enough to move the market. So this is really it's like the home run derby or batting practice. The pitcher's lost the zone. The buyers hold full count leverage in this category, so use it. PET, July remains under downward pricing pressure from lower feedstock costs on the paraxylene contracts, settling down 2 cents. No August price increase initiatives are in circulation. The forward picture is a little bit more balanced. Paraxylene is expected to rebound with crude oil when that recovers, and PTA is expected to follow. If that materializes, we may see August costs firm and the downside pressure on PET pricing begins to ease. The two things to watch: Formosa's MEG unit in Texas had some issues over the last few days. We're now in the more active part of the Gulf Coast hurricane season. So you got to remember that the Gulf Coast concentration of PET production here domestically in the feedstock assets means supply disruptions could shift the market pretty quick without a lot of warning. So negotiate your open needs now and monitor the Gulf Coast weather. And the pitch clock is running on you here. Let me close with the thing that connects all this. The batters with the best on-base percentage are rarely the ones with the most power. They are the ones with the most discipline. They take the first pitch. Yandy Diaz on the Rays certainly has power, but very patient hitter, and he almost always takes the first pitch. They foul off the tough ones. They wait for something they can drive. When they get it, they don't miss. The buyers who've built the best resin outcomes this year followed exactly that same approach. When an increase letter arrived, they did not respond immediately. They did not accept it automatically. They went to the data first. They knew what the feedstock costs, where the inventory stood, and what the market actually cleared on their specific grades from their specific supplier. And they responded with those numbers, and that's what separates the outcome. And this is where August is right now. Polyethylene, the first pitch came in, counter with the data. Polypropylene, the PGP settlement caught the corner, respect it, and renegotiate everything else. In the benzene related polystyrene, ABS, polycarbonate, hitters counts all three, but the bullpen is warming. These at-bats need to come to close here this week. And nylon 6, most urgent situation in the lineup. The situation with the setup pitch is on right now. Swing before the bullpen gets here. Leverage is real, and nylon 6 and PVC, use it. And PET, move now. Let's just keep our eyes on the Gulf Coast. August 1st pitch just came in. Work the count. Purchase wisely this week, everybody.